Hello, everyone. Welcome back. We've got a lot to talk about today, so we're not going to waste any time. We're going to get straight into the price action as always. I'm going to try and fit it in about 20-30 minutes. So if you've got 20-30 minutes, chillax, get your popcorn, and let's get into it. But first things first, big shout out to everyone who has followed this week. So shout out to hello, blah, blah, blah. I'm not even going to try and pronounce half of these names today. But yeah, shout out to you guys. Shout out to Michael. Shout out to that looks like Chanisara. Shout out to you guys, man. I butcher so many names, and a lot of people come at me and like, "Yo, my name's not this. My name's that." Well, shout out to you regardless. Welcome to the family. Hope you find these videos useful, and hope it's sort of just helping you understand how the market moves and making you a lot of money. And if you are making money, don't forget to join Discord. Don't forget to join the Discord and also drop a comment on the profit wall. How can you join the Discord? Well, you simply go on tradejournal.co.uk. This is the beautiful website. Go on tradejournal.co.uk and it's right there. Join Discord. Also, if you've got some inquiries, let's say you want a one-to-one lesson and all that sort of jazz, just put your details in. I'll get back to you. Usually, I aim to get back to you within 24 hours. So yeah, just pop your details in there and we can have a chat. But yeah, if you do want to access to the Discord, it's right here. I know some of you have asked how to actually get access to that. It's right there. Okay. All right. So that's that trading. Let's see. Now, also, big shout out to everyone leaving comments. It's always good to know that the videos I am putting out, and I've put quite a lot of videos out over the last few months, and quite a lot of free money. To be honest, that's pretty much the way I see it. It's free money. Um, so yeah, it's always good to know they're useful. They're being watched. So definitely leave comments. Your ideas, whether you think one trade is going to work, second trade is going to work, or just your thoughts and opinion on the market. It's much appreciated. So yeah, shout out to everyone. Shout out to Vahid. He's been here for a while. Or she. Shout probably he. Shout out to Vinod Jane. I think he joined a few weeks ago. Shout out to Shade Trade. Big shout out to Shade Trade. And just shout out to everyone. Shout out to Seal. Everyone who's leaving a comment or who's engaging. Yeah. So let's get into price action. Let's get into Bitcoin. Now I'm not going to bore you today with the typical, this is what's going on a large scale. I'm not going to do any of that today, right? Because we've done it before. We've done it time and time and time again. We know we're in this massive range. We know we haven't really cleared off of the all-time high, even though we've broken it. Yes, we're at 76K. Yes, the all-time high was at 74K. But invariably, we have to break above or close above 80K you know, before it's a clear road ahead, in my opinion. Now, that may not be the case, but in my opinion, that's where I think we've got to break above before we kind of see clear, a clear kind of bull trend or clear break of this range at the very least. All right. So we're going to zoom in now and we're going to talk about the last few days. Some people would say the last few days, Wednesday, Thursday, Friday was a bit boring. Well, obviously, we had the elections. We had Donald Trump, winning the elections, and that, definitely had an impact as to, the market. Obviously, why wouldn't it? It's, market is based off of supply and demand, and it's basically the interaction, the dance between supply and demand. So when anything happens, whether it's in the real world, that's going to affect the amount of people supplying or demanding an asset. Yes, you're going to see it in the price. Now, am I saying you should be glued to the television or glued to YouTube or glued to Financial Times looking at the news every single day? No. But what I am saying is, yes, it does have an impact on the price action. But usually you will see this. Well, really and truly, price action is a human. How do I describe it? It's just a human manifestation of what people were doing, right? So these bars, bull bars, bear bars, it's actually human interaction. Well, these days more computer models and more programs and algorithms that are deciding to buy and moving the market. Yes, but makes sense, right? If you have billions and billions and billions of funds, why would you rely on a human to trade for you, right? But anyways, I digress. So let's see where we were. What was the last trade setup, and let's analyze that and see how we would have done. We know we were tending towards that all-time high. We know that at that all-time high, we formed the nice consolidation range. Okay. Now, what is a range? A range is just think of a range, especially if you're a beginner. I realize we've got a lot of beginners here, but think of a range as a breather. You know, when you swim, all right, when you swim, you come up, you take a breather, and then you go back in, bang, 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 bang. You come up, you take a breather, and then you go back in, bang, 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 right? That's what a range is. It's an area where, the Bulls and the Bears, they're kind of in a tug of war, right? They've not quite decided, what way to go. And so whenever you have a range, that's a massive opportunity, right, to enter a trade. Why? Because first of all, the market ranges over 70% of the time, right? The market is usually ranging. It's usually in a state of, indecision, rather than trending. So as a result, why not learn how to trade range or ranges? Why would you give up 70% of the trade you could potentially be entering because it's a range? A lot of people will see a range and be like, I'm not bothered now. I'm gonna wait till it starts trending again. No, there are strategies, there are ways you can trade ranges, and we do that every single day here. So, anyways, we had a range. We said we could deviate from the range high, deviate from the range low, standard stuff. We said in the case that we break off of the range, we're not going to enter off of the break. We're going to wait for a retracement over here before we enter that long. All right. So what we're going to see is we're going to play this out now and see exactly what transpired. And not just that, we're also going to check, in the case that we did break out of the range, we had to have come towards this range high. We're going to check if we had a trade there. And if we had a trade there, all right, we would have seen whether it was a viable trade with a viable confirmation, or if we didn't get a confirmation. All right. So I'm going to play this now, and we're going to take a look and see what happened. All right. Oops. So here we go. This is it. So what did the price do? The price kind of did something very, very straightforward. It came up, it rose up with nice bull trend bars, nice strong bars. You can see most of the bars here, there are not many wicks. We had one little pause before we got to the range high with this black bear bar. Okay, and then that was, shortly followed by a nice bull bar, 4 bars. Look at this one, nice, shade bar at the top. And then we break the range. You see, we break the range, we close above the range. As soon as we close above the range, we need to be thinking, right, range break. Okay, what does TJ say after a range break? After a range break, we are expecting a retracement. Where could that retracement happen? Well, that's your job as a trader or a full-time trader. If you trade full-time, then you obviously know all of this. But if you're trading this part-time, you're doing this as part of your 9 to 5, then there's a lot of learning to do, especially at the onset. But once you've got through all the learning, trading can be quite boring and it can be quite repetitive after a while. Yeah. So this is what we see. We get exactly what we were expecting. If this scenario played out, we got a retracement. Following the retracement, I don't even have to check. I can already see a lovely entry here. And I'm sure a lot of you can see that as well. We can see that the market structure, was bearish on the way down on that retracement leg. And then it gave us a nice, beautiful flip. Okay, nice flip off of that retracement leg. And not only did it give you that flip, well, look at this. It also gave you that flip at demand. So if you trace all the way to the left, you can see we have a nice little demand zone over there, which is exactly what price came back for. Shortly after, off it goes. Boom. And then he created another range, and boom, here we are right now. Okay, so that's what transpired. What trades could we have entered? What trades could we have entered? So what I'm going to do is I'm going to head back to exactly where the price would have been. So right around here. And we're just going to go through this and see, well, how could we have entered this trade? Because, as you know, I'm not going to be here every single day or every single hour giving you these setups. I want you to be able to do this yourself and to be able to look at the chart and say, right, this is where I need to enter. And this is my confirmation. This is my entry. Bang, I'm in. And you can see the cash rolling in. All right. So on the 15-minute, we've just broken this range as of Wednesday. All right, Wednesday 9 o'clock. Now at this point, I'm probably getting ready for sleep, right? So I'm thinking, do I really want to enter this trade? Probably not, because I'm not one of those people who would stay up, watching the charts, waiting for us. I'll just wait for another trade. But if you did stay up, this is what you would have seen. So you would have seen price do this. Now, at this moment, you would have seen price start to come down, but you won't have panicked, right? Because this is simply a retracement for continuation. as we said, and you would know that the structure looks like this. So we have lower low, lower high, we have a lower low, and then we have a lower high. This is the structure from the top. Now, as we carry on, as more structure develops, we can see now that we have another, lower low all the way down here. Okay. But before we do all of that, you would have had to say, okay, where is my demand zone? Look, we've got a nice 45-minute demand zone over there, which is obviously a potential place for a long. All right. And how did we realize that 45-minute demand zone? Well, look, if we follow the trend from this range low to the range high, we can see that price was simply making high highs and high lows all the way up. And this was actually the last or the penultimate demand zone before we broke structure. We broke structure here internally. This is your internal break of structure, as we can see here. All right. So we went bang, 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 bang. So what is price likely to do? Well, on a bigger scale, price is likely to dip back into the range before it carries on. But on an internal scale, price is also likely to, if you think of this as a range as well, to be honest, price is likely to dip back into this range, all right, before it carries on. So that gives you 2 stars, all right, 2 stars. Now, why is this a good 45-minute demand zone? Why does this give you at least a 1-star demand zone? This is at least a 1-star. Why? Because look at the aggression. All right, let's make this a nice small star. Boom, give that a nice 1-star. Let's look at the aggression off of this demand zone. Price went, all right, this is clear high volume involvement. And not only did we have a nice aggression there, we have a juicy gap in between. So this is what we call a fair value gap. All right, for those of you who don't know what fair value gaps are, there is. You can learn that in one-to-one sessions, or you can Google it online with whatever floats your boat. And we can call that, do we have a template for that? I don't think we have a template for that. Fair value gap. But anyways, we'll leave it there anyways. In pink. It looks nice. So we've got a fair value gap there. Okay? Which is just a bit of inefficiency. This is where price went too quickly. All right? Price went too quickly. It didn't come back for a mitigation or full mitigation and left a gap in the market. So what did price decide to do after? Well, we've put out this zone, okay? And we're waiting to see what happens at this zone. So we simply play this further on. So bang, we can see that we have more market structure envelop. So I'm going to get rid of this for now because we don't really need this. We can see that right now we have lower high and another lower low. All right, and we've just dipped into our demand. All right, so this is where I'm waiting to see price. You need to do something right now. Why? Because this is proof that my demand zone that I spent hours looking for is going to work. Okay, so you need to do something right now. I'm not waiting for another, 3 hours for this trade to work. No, it needs to happen right now. We need to get a break of structure right now. And if we don't get a break of structure right now, I'm going to bed. All right. Well, you should probably already went to bed because it's 5:30 at the moment. All right. So what we would do now is we would say, okay, cool. This is my decisional level. This is where price needs to break. So I'm going to even put in there break me, and we're in. All right, break me and we're in. I can't spell today. All right, break me and we are in. All right, and let's see what price does shortly after. Price. Boom, it breaks structure. You can't really see it because of the text, so I'll get rid of the text. So we break structure shortly after, and that's exactly what we were expecting. All right, we have a decent break. Now, it's not the most aggressive break. Yes, I agree. It's not the most aggressive break. You can see on the 15-minute, though, it is a break. This candle, this bar, closed above that prior high. That is what we call a break of structure. Now, some traders will say, this is good enough for me. I will enter this trade right now, and I will put my entry at the close of this bar. So as this bar closes, I'm going to put my stop loss at the low. All right, and I'm going to ride this at least to this range high. At least to this high. That gives you a nice 2.3 or 2.2x. Not bad. Not great, but not bad. All right. Now, this is trader number 1. Okay. Now, trader number 2 is going to say, trader number 1 might also say, I'm going to enter half of my position. All right. Because I realize we could get a retracement soon, and that will give me better risk reward. So I'm going to chuck 0.5% in there. And as I get my retracement, I'm going to chuck the other 0.5% in there, okay? Or there is the patient trader, which I would like all of you guys to be, all right? Who's going to say, all right, then I'm going to wait for a retracement, and I'm going to wait for price to come further down, all right? So at this point, you might want to drop down to maybe the 5 minute. You can see on the 5 minute, the structure is more definite. It is a very clear break, all right? You might even want to drop down to the 3 minute to get a reconfirmation if you want, all right? But at this point now, trader B says, well, we're getting a retracement. I would have entered my trade initially here. No, that's a short trade. Excuse me. We want a long. I would have entered my trade here, all right? But, I'm going to be patient, and patient pays off. You see what happened? Price comes back down. My risk to reward is getting better. If we take that all the way up, 1 second. So that should be, let's say this is the target of the trade, yeah? You can see now my risk to reward is 5x. That means you risk 1,000, you just made 5,000. You risk 10,000, you've just made 50,000, okay? So look at what we get there. We get nice retracement, all right, on the way back. And as we get a nice retracement on the way back, sure, we're going to get a break in the structure shortly. So, if you're tracing that on the way down, you can see that, price actually came down again. So if I'm not going to lie, I'll be honest with you, seeing this live, I'm sure a lot of people would have panicked. A lot of people would have panicked because they would have thought, "Oof, this is a deep," especially if you got in here, you might have thought, "Oof, this is a deep retracement and it's coming very deep." All right. But this is where you might also want to say, okay, before that break of structure, did we get any zones? Are we coming back for any zones? And look, there was a 5 minute zone there. And maybe that's what we're coming back for. Guess what happens? Bang. So price comes, dips into this zone, and then it gives us a nice reconfirmation. And why is that a reconfirmation? Because the structure on the way down, if we're looking, looks like this. So we've got lower low, lower high, lower low, lower high, lower low, lower high, lower low on the 5 minute. All right, not the best structure. Kind of break structure, but retraces with a wick. And then I believe it carries on further. 3 minute isn't great here. Yeah, so I'll probably go for the 5 minute here. Why? Because we have a lower low, lower high, lower low, and then we get a break. And then we get a break, and then the break is, off we go. The rest is history. The break was all the way here. This is where the break took place. All right, so this region here. That's where we got that break of structure. All right, so you might have entered there. So you might actually argue, well, if we entered here and we would have entered here initially, what's the point? We basically got the same entry. All right, what's the point? You might as well have just entered at the start. Well, that's fine. That is fine. Or you could have said, I'm going to put a limit order here. I'm going to trust this block with my hard-earned money that I've earned with this dusty 9 to 5 that I'm doing. Yeah, and I'm going to trust it. Okay, that's fine. Some people do that and it pays off. Okay, but anyways, you would have entered that trade. It would have been a juicy trade. You would have hit your targets and you would have been laughing right now, especially if you held it. Now, if you held that trade, where would it be right now? If you held that trade, you would have been, let's see, we're gonna see the max you could have made already. So the max you could have made already, you're looking at 7x, about 7x, okay? So times 7 of your account, not bad. Oh, sorry, not times 7 of your account. You'd have made 7% on your account. If you entered off of the break initially, you'd have made about 5%, 4 or 5% on your account. Okay? So not bad at all. So that I think that was the trade for Thursday. Okay? And it actually happened Thursday morning. All right. So you had this whole area to enter a trade. Okay. Now you could have also seen this as a potential Wyckoff where you've got, oh no, actually you can't. I wouldn't. You can't. But I'm just going to quickly check to see if Market Cipher, the best indicator in the world, if Market Cipher gave us an entry. Well, Market Cipher was a bit tricky here. Why? It was tricky because it didn't give us a clear entry the way it should have, but it gave us an entry. Why? We did get a bullish divergence here where our momentum wave is heading up as price is heading down. As we can see, this is known as a bullish divergence, and it's a good predictor, a good indicator of when price is about to reverse. However, the only thing that's a bit annoying here is that, look, we're getting money flow come to the downside. Risky, risky, risky. I like to see that divergence when money flow is heading up. All right. But anyways, if you are looking to get Market Cipher, then definitely get Market Cipher because it will help you, especially if you're not so great at market structure so far. And I'm not pushing Market Cipher. I've got no affiliate links with Market Cipher, but if you do get Market Cipher, just drop in a word to those guys and let them know how you got to reach them. Okay. So yeah, feel free to get. I think it might be about £800, $800 for a lifetime. That's not bad. That's probably like one trade. I remember when I got Market Cipher years ago. My first trade, I think I made about $900 on it. That was the first trade, and that simply paid off the actual amount of the indicator. So definitely worth it. All right, so now we obviously got that entry there. We looked at the range high. Did we get a trade at the range high? Well, let's take a look. Did we get a flipping market structure at the range high? High, high. High, low, high, 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 high. So we obviously broke out of this range, as we can see here. So are we looking for a rotation all the way to the range low? Probably not. Are we looking for a retracement though, back into the range, as we know happens all the time? Yes, because this becomes our new range. We break the range, we retrace. Okay. As we retrace, we create another range. All right. We break it, potentially a retracement. However, it goes without saying, we must realize, or the keen eagle-eyed traders among you guys, you must realize that these break-of structures, they're slacking. They are slacking. These break-of structures are slacking. What do I mean by that? If we look at the amplitude of break-of structure from, let's say, if we measure it from this peak to that peak, all right, you're looking at about a $5,000 move. Now, if you look at the next impulse up or the next leg from this peak to that peak, you're looking at about a $1,000 move. If you're looking at the next impulse up, perhaps from this peak to that peak, even less. All right. So what's this telling me? This is telling me that the bulls are losing strength. The bulls are losing strength for whatever reason. They might be taking profits, or the bears might be stepping in, but they are losing strength, and this is usually indicative of a range. So I wouldn't be surprised if we start to range here, which is kind of already starting to look like a range. I wouldn't be surprised if we start to range here. All right. Um, so definitely bear that in mind. We are losing strength on the way up. What we would have liked to see, if this was going to be a nice juicy break, is this to come all the way up there, maybe down there, and this to come all the way up there, and then maybe another impulse down, and it to come all the way up there. That's what we would have liked to see, and a very convincing break. But that's not what we're seeing so far. So we just have to bear that in mind. All right. So we are where we are, so we can get rid of all these guys. We don't need it anymore. We've done the analysis, we've entered those trades, we don't care, we move on. Even if you didn't enter that trade, you don't care, you move on, you keep it stepping, all right? So here we are now, and we're looking to see where is the next trading opportunity here. Where is the next trading opportunity here? Well, if we take a look at this structure, if we say this is high low, high, high low, this is probably like your 1 hour or 2 hour structure. If we take a look at this, all right, this means that in order for us to really turn bearish, before we can really turn bearish, all right, we need to see this level lost. Okay, this is our last level. This is our, penultimate, high and low that we need to see lost. So if we start to get close below that, I'm going to look for a retracement and I'm going to enter that trade 100,000%. All right. Now, what we can see here is we can see that, yes, we had a range. Okay. Okay. However, we did get a break on the 5 minute from our range high, this being our range. We got a break on the 5 minute from our range high. All right. And if we look at the 10 minute, is that still a break? Yes, it is. 15 minute, oof. So as soon as we go to the 15 minute, that is no longer a break, which is worrying. As soon as we go to the 24 minute, okay, that's a bit suspicious. On the 30 minute, it's not a break. On the 1 hour, it's not a break. All right. So now what this is telling us is this could actually be a manipulation of retail longs. Okay, this little thing here may be a manipulation of retail longs. Why? Because it's unlike this one where we got a close above that level. Here it seems like we didn't get a close above that level, which means we could potentially be getting a PO3 here. We know what PO3 is, don't we? This is our accumulation. This is our manipulation, and followed by our bearish expansion. All right, so this may be what we're seeing right now. A nice little PO3. Now, if you were aware of that, I wasn't. I'm not going to lie and pretend like I took that trade. I wasn't. Did we get a trade entry off of that high? Well, off of that range high, considering it wasn't a close, did we get an entry? Well, let's take a look. Well, at our manipulation phase, if we take a look at our structure on the way up, we have higher high. Okay, we will draw that in. Yep. Yeah, I guess we did. We got a break there. We got a nice flipping market structure here. Okay. And, we would have entered on that retracement, but, to be honest, I won't be too upset if I did enter that one. The reason being is we didn't really get a deep retracement, did we? Because that retracement simply came up here and then it followed through down again. Okay. What we would have liked to, well, actually, did we actually get a retracement into our old level? Let's check. Well, we just missed it. We just missed it. We just about missed it there. Okay, so don't be too hard on yourself if you missed that. You could have entered it if you waited for a reconfirmation and you waited for the structure to break right there, and then you saw that break and you entered a short. Yes, you probably could have caught that one. All right. Now, but if this is the PO3, your target of the PO3 is all the way down here. And, I'm just seeing this now, but we did have nice little liquidity on the way up. It's not your conventional liquidity. I would have liked it to look like this. If we had this, if this nonsense didn't happen earlier, and this was nonsense because we have this silly divergent market structure taking place here, where we've got these going up there, and we've got this coming down here. All right, you tend to see this a lot on Euro USD, a lot, but not necessarily on Bitcoin, where you break up, then you break down shortly after. But anyways, you kind of have to go with what you're given, to be honest. All right, but we can see we've got liquidity at the bottom, at the downside. We've got these longs, we've got these bulls, you've got these bulls, you also got these bulls. So chances are price might be coming to at least take this guy, or that guy. Hence why the target is down here. Oops. Hence why the target is down here. All right. But I'm going to be watching to see what happens as we get there. Okay. I'm going to be watching to see what happens as we get there. But I know my key level is here, and we also have a 5-minute zone underneath. So I'm going to be watching that for my actual potential long trade. Why not? I'm going to be taking that long trade all the way up, and that will just classify as a deep retracement if it is to go further up again. But if it is to do something like this, if it's a break structure down here, all right, and then retrace, well, then I'm going to be in a short trade over there, okay? I'm going to draw this in dotted line because it's not happened yet. It may happen, but it's not happened yet. All right, so that's a potential entry, all right, just for you guys who are looking for those levels. All right. Now, if price comes down and starts to rally back up again, that will be fine. And in that case, I'm going to simply treat this as, yep, you guessed it. I'm going to treat this as a range based on where price drops. No, we don't want that. Let's do that guy. Yeah, so I'm going to treat this as a range. And because I'm going to treat this as a range, I'm looking for trades at the range high as well. All right, so all of this is just thinking in the future, right? We don't have anything yet. It is a weekend. We may just play around here for a bit. That's fine. So I'm thinking in the future. So looking for short there, long there. Now, if we have another impulse up, similar to what happened here. Yeah, oops. Similar to what happened earlier, I'm going to be looking to see, okay, where does that impulse go? How far deep does it retrace? Do I get a reconfirmation? Can I enter along there? So that's another long. So long number one, long number two. Okay, short number one, short number two. Okay, at the moment, that's kind of all you need right now. That's kind of all you need right now as far as short-term scalp trades. In my opinion, those are the highest probability plays. I've checked here. I don't think there's anything left in here. Okay, no, there is. There is. I tell a lie. We've got this guy over here on the 12-minute. All right, and look at that. Look at that. Price is already getting a reaction from that guy over there on the 12-minute. All right. So see how price action respects supply and demand. Don't sit here and tell me it doesn't work, because we've seen it. We see it every single day. It works, and it's a great way to trade. All right, so that is actually a zone, and that's a zone on the 12 minute. So I'm just going to mark that out. It's a potential place for a long. Yes, it is. So why not look at it? Why not look at it? If we start to close, if on a 12 or the 15 minute, we start to get a close above this level here. Okay, so something that looks like this. Boom, boom, boom. Yeah, I'm going to be into that trade, 100%. Okay, so that's another potential long play that could take place. All right. Well, I think we're kind of gone past the time here, but I hope you found this useful. If you have, feel free to hit the follow button, leave a comment, and don't forget to engage on YouTube, Discord, etc. We're trying to grow this, and we're trying to actually get to 500 followers on here by New Year's. I think we're about 250 at the moment, so we'll get there. And yeah, I will see you guys next time. Otherwise, make sure you're taking some time off the charts. Make sure you're spending some time with your loved ones, your family, your friends. And yeah, the charts aren't going anywhere. They're going to be here today, tomorrow, next week, next month, next year, in 10 years. All right. So yeah, I hope you have a great day, and I will see you soon.